every trend ends. Not because the news changed, not because an indicator crossed a line, because the structure broke. And the exact moment the structure breaks is called a change of character. It is the most important signal in all of market structure analysis. And it is the signal that most retail traders either miss completely or misread so badly that they act on it at exactly the wrong time. Here is the problem. A change of character looks almost identical to a normal pullback within a trend. The same candles, the same price level broken, the same spike in volume. But one of them is a continuation trade setup, and the other is the beginning of a new trend in the opposite direction. Getting this distinction right is the difference between entering at the start of a move and entering at the end of one. This video teaches you to tell them apart. Every time. Video 9 of the complete trading series. Let's get into it. Before we go into the mechanics of a change of character, let me frame exactly where we are in the series and why this concept matters so much right now. In video 7, we learned that market structure is built from the sequence of swing highs and swing lows. In video 8, we learned to identify those swing points with the precision that makes structural analysis reliable. Now we are going to use those correctly identified swing points to answer the most important question in trend trading. Has the trend changed? Not, is the trend weak? Not, is the trend slowing down? Has it actually structurally, mechanically changed? And the answer requires identifying one specific event on your chart. What a change of character actually is. A change of character is a break of the most recent swing point in the opposite direction of the current trend. In a bullish trend, the current trend is making higher highs and higher lows. A change of character occurs when price breaks below the most recent higher low with a candle close below it. That one sentence is the complete definition, but unpacking it requires understanding every word. Most recent means not any old swing low, the one created in the most recent pullback, the last higher low that was part of the ongoing bullish sequence. Higher low means it was a qualified swing low that held above the previous swing low, confirming the bullish structure was intact. And break means a candle close below it. Not a wick, not an intraday dip, a candle that closes below the level of that swing low. Here is why the close matters so much. In video 4, we learned that the close is the final verdict of a negotiation. A wick below a level tells you sellers pushed price there temporarily, but buyers pushed it back before the period ended. That is not a break. The buyers won that negotiation. A candle that closes below the level tells you sellers pushed price there and kept it there when the period ended. The buyers could not push it back. The sellers won the final verdict. That is a break. And in the context of a change of character, that is the structural evidence that sellers have overcome the buyers at a level where buyers previously had control. The difference between a change of character and a normal pullback. This is the question that will determine whether you enter trades at the right moments or the wrong ones. Because they look identical in the moment they happen, both involve price moving against the current trend, both involve a key level being approached, both create the same fear in traders who are positioned with the trend. The difference is in which swing point price is breaking. In a bullish trend, a normal pullback moves price down toward the most recent higher low, but does not break below it. Price approaches the swing low, buyers step in at or above that level, and the trend resumes. This is the pattern that defines a healthy trend. Each higher low holds. Each new high is made. The structure is intact. A change of character is when that pullback goes too far. Price not only approaches the most recent higher low, but closes below it. The level that buyers previously defended is no longer defended. The structure has broken. The key insight is this. When you are watching a pullback in a bullish trend, your single most important question is not how far is price falling. It is, has price closed below the most recent higher low? Until it does, the structure is intact, and the trade setup is a continuation. The moment it does, the structure has changed, and you are now in a potential reversal situation. Strong versus weak change of character. Not all changes of character are equal, and understanding the difference between a strong change of character and a weak one will save you from false signals that destroy good trades. A strong change of character has three characteristics. The break candle is a large, decisive candle, not a doji. Not a small body with large wicks. A large, full-bodied candle that closes well below the swing low, not just barely below it. Volume on the break candle is expanding relative to recent candles. Increasing participation means the selling is conviction-driven, not just mechanical stop triggering, and the break happens after a prolonged trend, not at the very beginning of a move. A trend that has been running for a significant period with multiple higher highs and higher lows has accumulated more positions. When it finally breaks, the unwinding of those positions provides the fuel for a genuine reversal. A weak change of character has the opposite characteristics. The break candle is small, barely closes below the swing low. Volume is not expanding. Low participation suggests the break is mechanical rather than driven by genuine selling conviction. And it happens early in what appears to be a developing trend rather than a mature one. A weak change of character is more likely to be a false signal. Price breaks slightly below the swing low, triggers a handful of stops, and then recovers sharply. This is actually a liquidity sweep of the swing low followed by a continuation of the original trend. And if you entered short on the weak change of character, you are now trapped on the wrong side of the continuation move. How to confirm a change of character? A change of character is the first signal, but the first signal alone is never enough to trade on. You need confirmation. And confirmation comes from what happens after the change of character. The first confirmation is a change in the internal structure. After the change of character breaks the most recent higher low, price typically bounces. That bounce will form a new swing high. If that new swing high is lower than the previous swing high, you have the first piece of confirming evidence. The market is now making a lower high. Combined with the lower low created by the change of character, you now have the beginning of bearish structure. One lower high and one lower low is not a full bearish structure, but it is the first two data points that confirm the change of character was real. The second confirmation is the retest. After a genuine change of character, the level that was broken often acts as new resistance. Price bounces from below, rises back toward the broken swing low, and fails to break back above it. This failure to reclaim the level is the retest confirmation. The level that was once support has become resistance. And the failure to reclaim it tells you the sellers who drove the change of character are still present and willing to defend that level from above. A retest confirmation combined with a lower high is a high-quality signal that the change of character was genuine and a new bearish trend is beginning when a change of character fails. Not every change of character leads to a genuine reversal. Some of the most powerful continuation moves in any market begin with a false change of character. Price breaks below the most recent higher low, triggering the stops of buyers who were correctly positioned with the trend, collecting the liquidity sitting below that level, and then reversing sharply back above the swing low and continuing the original trend with renewed momentum. This is the liquidity sweep that Video 6 described in the context of order book mechanics. The institution needs the buy-side orders below the swing low to fill their own sell side before the big move down. Or, alternatively, they engineer a break below the swing low to trigger stop losses and collect cheap positions before the continuation higher. The way to distinguish a genuine change of character from a false one is by watching the three elements: the size and conviction of the break candle, the volume on the break, and whether price reclaims the broken level quickly after the break. A genuine change of character has a large break candle, expanding volume, and price that stays below the broken level. A false change of character, a liquidity sweep dressed as a change of character, has a smaller or wicked break, does not show significantly expanding volume, and recovers back above the broken level within 1 to 3 candles. Speed of recovery is the most important tell. If price snaps back above the broken swing low within a single candle or two, you are watching a liquidity sweep, not a genuine structural change. The change of character in bearish trends. Everything we have discussed applies equally in the opposite direction for bearish trends. In a bearish trend, the structure is making lower highs and lower lows. A change of character in a bearish trend occurs when price breaks above the most recent lower high with a candle close above it, not a wick above. close above the most recent lower high. That close tells you buyers pushed price above the level where sellers previously had control and kept it there when the period ended. The sellers could not push it back before the close. And that is the structural evidence that the balance of power is shifting. The confirmation process is the same. A new swing low after the break of the lower high that is higher than the previous swing low gives you the first lower high already in place plus a new higher low. Two data points of bullish structure forming, and a retest of the broken lower high, which now acts as support, followed by a bounce and continuation higher, is the high-quality confirmation that the bearish trend has genuinely changed character. Reading change of character signals on multiple time frames. Here is where the concept becomes truly powerful. A change of character on one time frame is not the same significance as a change of character on another time frame. A change of character on the 1-minute chart tells you the 1-minute structure changed. That may be relevant for a scalper, but it means almost nothing for a swing trader. A change of character on the daily chart tells you the daily structure changed. That is one of the most significant signals you can observe, because the daily structure represents the decisions of every participant across every session. When the daily structure changes, something fundamental has shifted in the market. The practical application of this multi-time frame understanding is as follows. When you observe a change of character on the daily chart, you do not immediately enter a trade. You drop to the 4-hour chart and watch for confirming internal structure development. A change of character on the daily will show up as a significant move on the 4-hour chart. As the 4-hour chart begins to form its own lower highs and lower lows after the daily change of character, you are watching the internal structure of the new trend being established. And when the 4-hour forms a pullback that creates a higher low within the new bearish trend, and then breaks lower again, that is your entry signal. The daily change of character gave you the direction. The 4-hour internal structure gave you the timing. The entry comes at the intersection of both. Change of character and liquidity. The connection between change of character events and liquidity pools is one of the most important relationships in all of smart money trading. And it is the connection that separates traders who understand why markets move from traders who are only tracking the what. When a bullish trend experiences a change of character, price has broken below the most recent higher low. Below that higher low were the stop losses of the traders who were long the trend. Those stop losses are sell orders. The institution needed those sell orders to fill its own short position. The change of character was not random. It was engineered to collect that liquidity. The break of the swing low, the triggering of the stops, the collection of the sell orders, all of this was the mechanical process by which the institution built its short position before the trend reversed. This means every genuine change of character has a liquidity story behind it. The swing low that was broken was not just a technical level, it was a liquidity pool, filled by the institution before the real move began. And once that liquidity was collected and the institution was positioned, the change of character became the first visible evidence of that positioning. You did not see the accumulation, but you can see its result. Here is the mindset shift from this video. When you see a change of character, stop asking, is the trend reversing? Start asking, why did price go to that specific level and break it? What was sitting below that swing low that the market needed to collect before moving? Who benefited from that break? The answer to those questions tells you whether you are watching a genuine change of character or a false one dressed as a reversal. And that answer, consistently read, is what makes the difference between entering at the beginning of new trends and being trapped in the reversals that never come. Drop a comment. Looking at the charts you currently trade, find the most recent change of character and tell me if you think it was genuine or a false signal. I read every single one. See you in the next video. Stay disciplined.